Hi, everyone. Welcome to this episode of Scouting for Growth. I am Sabine VdL, your host, and today we are diving into one of the most dynamic conversations of the year, State of the Nation in Insurance and InsurTech. This special episode brings together 5 extraordinary global leaders to explore how InsurTech is shaping the future of insurance across every corner of the globe. With over 8,000 startups and $99 billion raised since 2015, InsurTech continues to push boundaries in AI, sustainability, and digital transformation. But what is next? So that is what we want to find out. So joining me today are 5 trailblazing experts, Florian Griot, a European venture capitalist leading investment in InsurTech and artificial intelligence, Ilarios Itriago, a pioneer at digital cyber insurance and a champion for LATAM's growing ecosystem, Lisa Wardlow, yes, my dear friend Lisa, a global strategist redefining financial services through cutting-edge technology and education as well, Michael Waits, a leading digital media and podcasting expert with unmatched insight into Asia's tech landscape, and Dr. Tunde Salako, a serial entrepreneur driving financial inclusion and innovation across Africa. So all 6 of us together, we will explore the emerging trends, regional opportunities, and transformative technology shaping InsurTech in 2025 and beyond, from macro insurance in Africa to digital disruption in LATAM to the revolutionary AI-driven solutions, right, pushing in the US with $500 billion, I think, committed for investment. So we'll see what happens with those. But also AI solution being implemented in Asia, in Europe. I believe this conversation is truly global conversation and you don't want to miss it. So grab your coffee, tune in, and let's uncover what is next for the future of insurance innovation. Hello. Good afternoon or good morning, or good evening for some of you. I'm really thrilled to actually be hosting with some of my best friends around the world this LinkedIn Live around the state of the nation in InsurTech. And so let's get started with, I guess, a little bit of stat. So InsurTech, I think, and hopefully Florian is going to agree with me, is around 8,000 startups to date, raised around $99 billion since 2015. And we have seen some amazing unicorns such as Boltec, Keen, Branch, Glia, Emerge, among others. In 2024, though, things have crashed, right? And we've seen around $4.8 billion raised by InsurTech startup. And the winners actually focused their effort around vertical SaaS platforms, artificial intelligence, sustainability tech, yes, among others. Today, I'm so thrilled, as I said, to bring an amazing panel of professional experts to dive around, those trends. On a global basis, we thought it's time for us to get us all together to look at it from a global perspective. So we are going to cover macro insurance in Africa, digital disruption in LATAM, the evolving scene in United States, Asia, Europe, and the United Kingdom, right? We have to separate things nowadays. So let me welcome some amazing people. Florian, Lisa, Ilarios, Michael, Tunde, thank you so much for joining us today. We are going to dive into strategic shift, right? Regulatory trends, partnership models. And so if there is anybody wanting to ask questions, please drop questions in a comment and we'll come back to you. It might be a bit difficult for us to do that whilst we are speaking, but we promise we'll come back to you and observe those questions. So my first question goes to my dear friend, Lisa Wardlow, in the United States, I think in Toronto today. So Lisa, where do you see the biggest opportunities in InsurTech growth in the United States in 24 months from now? What is going to fuel it?
So, I think that everything we've done to date has been kind of getting us to this inflection point that we have with AI. And I do not see AI as being hype. I do not see it as being this, shiny ball that we've had before. I also don't see it, Florian, I clearly follow a lot of your thought leadership, so I'll tee this over to you next, but you can pick up on that. I also don't see it as like eliminating the human and the front end. We have all these predictions of like we can be all autonomous and do everything without. But I do see a couple big themes driving InsurTech, and I'll say further than InsurTech, meaning foundational insurance value chain, how we deliver on what's necessary with the macro trends, with climate, with capacity, with affordability of insurance, right? We used to be in a world where socioeconomic disparity kind of really created, coverage gaps and things like that. And now we're in a world where the traditional insured is either being opted out because they can't afford insurance or they're not offered insurance. And so those are really big themes. Clearly we see it right now, in a horrific way with the California fires and everything going on. But if I had to think about like, what are we going to do about it, right? Our job is and has always been to make insurance sustainable, affordable at a price point and risk appetite that the capital market can bear. So underneath that, I'll be super fast because then I want to tag it over to Florian to kind of extend this. I believe that we have to make AI not an add-on. It cannot be a point solution. It cannot be this thing that we just add on top of existing engines and infrastructure. My layman example of that is, imagine that you're trying to drive an EV car, but every other piece of technology in your stack is gasoline engines. Those two things don't work together without some rework. So foundation for AI scalability and security as not a bolt-on is going to be a big trend that I'm watching for. The second thing I'm watching on is agentic AI that's cross ecosystem. Agentic AI internal, great, cool, check the box. We'll definitely see that emerge. But the winners, by the time we're having this conversation in 2026, will build agentic AI that can do handshakes across value chain and across ecosystem. And so, Florian, I'm going to take it over to you to see, on that investment strategy and trends you're seeing. I'd love to hear like your thoughts from like what you're seeing in Europe as well as what you're seeing on the investment side.
Yeah, thanks a lot, Lisa. Hi, everyone. Thanks a lot, Sabine, for having me. Regarding the trends that I expect, let's say, for the very near future, I think that AI is an obvious one, and you made your own assumption and prediction. So I will not, let's say, double down on that topic. I really believe that there is a trend emerging. Back to what's happening nowadays in Davos, by the way, around emerging risks. I think that this is something that we start seeing growing in the InsurTech scene, at least in Europe, based on the KPI that you referred to. We had a look at all the investment as every year for 2024, and actually 20% of all the deals were around that very specific topic. So most of these startups are actually, if you position themselves on the value chain, you would put them around the pricing / underwriting part of the value chain. You might put them a bit higher in the value chain around product. But for sure, there is, I would say, a need for several of these emerging risks which didn't exist in the past or which were not that damaging in the past. You refer to climate change, for instance. You refer to electric vehicle, which we put in emerging risks because we believe that the risks surrounding these kind of cars is not the same as the one for thermic vehicles. You could put cybersecurity. These are probably the three most obvious one. But back to the AI topic, AI surrounding or risks surrounding AI adoption could be part of this topic. Nowadays, the Bitcoin, for instance, it's surging. So there is probably something to expect around a risk, financial risk surrounding crypto assets, digital assets. So these are a lot of topics which are slightly different on the paper, but actually they have something in common. Again, they didn't exist or were not that heavy in the past. We, as a market, including incumbents, we lack historical data, or we lack data at all. So there is an opportunity, I believe, for startup to address this vertical / niche market, be very focused on one specific need, spot data, get sense of this data through algorithm, and then incumbents can carry the risk accordingly. So that's something that we start seeing at a higher pace last year, and that we expect for the next few months, and most probably in the next 18 to 24 months. I think that I will go for you, Michael, getting your perspective on which insurance segments present the most untapped potential in your market, and obviously why you think so.
Yeah, so really good. I'm really happy to go next. And I just want to make a comment about AI, if you don't mind. If you've been through multiple business cycles, every now and then a new technology will get advanced, and people then try to build businesses around that specific piece of technology. I don't think AI is any different. I mean, it has its differences. But if you remember 1998, 1999, and 2000, when the internet first started becoming prevalent, people tried to build internet-specific businesses. And at some point, they just become ubiquitous, and nobody talks about the internet anymore. And I think AI is going to be the same thing. So I'm going to take a different tack. I'm going to answer Florian's questions. We're like, where the real opportunities and where the real growth is in Asia. But AI is included in all of these answers, whether it's agentic AI, generative AI, and we can jump into where it matters and stuff like that. But I think the three biggest opportunities in Asia, and you have to remember, particularly in Southeast Asia, the markets are way more greenfields than they are in Europe and in the United States. And I think Tunde's answer would probably be the same, and I'll go to him next, right? But here, like embedded insurance and ecosystem integration are a really big deal, right? As people get onto external ecosystems outside of their own, they want to embed insurance in them, right? Across sectors. So this is something similar to what Lisa said, because we don't think that like insurance just in the insurance space is enough. That's the first thing. The second thing is that SME-focused insurance solutions, which doesn't sound super sexy until you realize that 95 to 97% of the economy, particularly in Southeast Asia, is driven by SMEs, and something like 75% of employment is in the SME sector here, and it's wildly underserved from an insurance perspective. It's just a massive opportunity. And then digital health and wellness. Again, because the health ecosystem out here is not nearly as well developed as it is, and don't get me wrong, I live in Bangkok. Bangkok basically invented health tourism, medical tourism, right? And if you go into a hospital in Bangkok, I think you'd be shocked at how modern and amazing it is. But that prevalence for the rest of society is not there yet. So all of the people that need health, digital health and wellness are going to get it that way first. And that's, again, just a massive opportunity. We could also talk about climate and cyber risk insurance, all that stuff too, but those are my three big things in Asia. And that's very different, I think, than what it is in the US or North America and in Europe. Tunde, how about Africa?
Awesome. Thanks for passing the ball, Michael. I think I want to share your sentiments, but let me put it to a segue between having the technology as the foundation of the building, right? So what has happened on our own side of the fence is that just not too far ago, to share some context, 10 years, 15 years, right? There were a lot of technologies that were, so to speak, out of reach, right? But very recently, right, since 2010 downwards, what we've seen is a progressive closure in that gap, wherein there's so much abundance in terms of different technology stacks. And then that has shifted the paradigm on our side of the fence, where, innovators and developers and insurance companies, have the opportunity and the capacity and the competence to not only act locally, but also think on a global perspective, right? Take for instance, there's a high, massive brain drain where you're having very skilled professionals emigrating and live in the continent. But at the same time, the irony of that paradox is you have a lot of influx onto the continent, right? And so the question now beseeks, like, where exactly do the opportunities lie, right? So it's a matter of perspective. But I digress, right? For us, what I'm seeing through our lenses, predominantly to piggyback on what you said, is not just the SME insurance opportunity, it's the MSME insurance landscape, right? Because there's a lot of growth that is happening and burgeoning for the emerging communities, right, where you have low and middle income people developing the mindsets and the capacities to transfer risk, right? It's just not, risk on life anymore. We're talking about things that have to do with agricultural insurance, livestock insurance, etc., right? And so that's very prevalent. And very interestingly is the concept of the modality of the emerging trend of pay as you use, right? Which used to be almost mission impossible, right? Like even Tom Cruise couldn't crack that code a few years back. He definitely couldn't. But it's really shifted where everyone is now thinking, okay, so how do we do this? Because here's the thing: when you look at the African continent, it's huge population-wise. Probably not comparable to certain places in Asia like India, but it's really, really huge. And because of the heterogeneous diversity of the continent, where the South, the West, the East, and the North are completely different, right, in terms of culture, in terms of acceptance and everything. One thing that is universal is across the markets, right? That's an evolving trend that is getting stronger and stronger. And we're seeing the legacy systems that have been built in place to prevent that being circumvented, right, by innovation, by smart next-gen insurance companies that are trying to make sure that this product affordability, accessibility can get to the doorsteps of the common, person, right? Doesn't necessarily have to earn a lot of money before he or she can transfer risk. And then the third one, which also excites me, is I would say data analytics as a service, right? Because here's the thing: when we look at the traditional insurance companies on our side of the fence, we're sitting on tons and tons and piles of data, right? And one of the things that makes it very Herculean is the scope in which each organization now has to deep dive and start thinking about how I make that make sense, right? So we've got innovative companies, next gen companies that are beginning to provide that service as a standalone to be able to use the information to make sense, right? To make sense in offering advanced product offerings, and to also combine with technology to be able to target the right set of people, right? And finally, no code. No code is something that is, for me, very deep and close to my heart, because no code gives a massive gateway for training and capacity development for talent on the continent, right? Because while you might say, okay, we don't have, if you're looking at it, we've got a very large workforce that is now being trained and building capacity with technology development and skills and technology stacks. However, with the concept of no code, what it does is it just widens the opportunity to lower the barrier for people who don't even understand technology to be able to combine simple skill sets and build products that are agile and able to go to market very quickly. So yeah, those are the four things that crossed my mind and that we've seen. And I'd like to see whether it's the same thing in LATAM as I pass to Hilario. What's happening on your side of the fence?
Today, you left me with nothing, man. You said it all. That was so complete. Thanks for that. That's great. I mean, I agree with everything you guys have said. I would say in LATAM, we're very excited by the fact that as we've gone through this InsurTech journey, and all of you would remember back in the days when InsurTech Connect happened in 2016, and people were debating what was InsurTech and how do you actually spell it, with an E, without an E, and all that. I always tell that joke, but it was real, right?
And for the record, it's without an E, just for the record.
Absolutely. Thank you for that. For those of you out there who are still debating, not only
I'm
has
joking.
it been too long,
with an E is very trademarked.
but what I'm trying to put forward is the sense of maturity that we've gone through over the last 8 years. I do remember when we started this InsurTech journey, and it wasn't only to InsurTech, but we've gone from the lowest level of maturity when InsurTech was mainly used for distribution, and distribution meant let's automate the chaos. We can all do a web portal. Let's do exactly the same we had on paper, and let's put it on the screen. And, you know, it was like, so what are we doing differently? Oh, there's no longer paper, but we're doing things exactly the same. To where we are today, when, you know, imagine we're talking about AI, we're talking about, you know, how do we apply those things to SME, which was always the lost and forgotten segment, at least, you know, in Latin America relative to large commercial and specialty, and things of that. What I like the most, that excites me the most, is the leapfrog effect that these technologies are really bringing into the conversation, right? Whereas we've gone from automating the chaos to now, you know, picking on Michael's point on SMEs. SMEs, you would have tell them, how are you doing customer service? You know, why don't you have, you know, a call center? So I can't afford it. Really, now an SME can actually use AI, have a chatbot, you know, and do customer service proactively and a number of things around that, and then sophisticate from then on. So those kind of accessibility possibilities that technology and the maturity curve is providing us in emerging markets, but also in mature ones, but mostly in emerging, is quite exciting, because that then goes back to Lisa's point, which is, how do we make insurance sustainable, affordable, and reaching more people? Because that's really what we should be focusing on. More people insured every day, everywhere. So I'm really excited about that. I think all these technologies are inching us forward to getting into that level. The second part to that is, that doesn't mean we should underestimate how difficult it is to do it well. You know, all of us can do it, you know, and you can go and do ChatGPT and try to do so. That doesn't mean that you're doing it in the best way possible. So we should not lose sight of the fact that, yes, these technologies are there. Yes, they're inching us closer to doing a better job, but we should not lose sight of the fact that we want to do it in the best way possible, because customers know and can differentiate between a crappy solution and a good one. And insurance should focus on delivering the sophisticated one, not the crappy one. So with that, I think we're moving themes, Sabine. Am I right? And I would like to send it to Michael now.
Which theme? Which theme are you going to go for?
Which theme are you going to go for? Yes.
I'm going to go now for, because I'm working on it right now. I'm going to go for the regulatory environment, because all of these things that we're talking about, right? Then typically, not necessarily, but typically we say, oh, but it's going to hit the regulatory wall, you know, and how quickly can they move and how do we do? I'm actually finding the opposite in Latin America with regards to cyber. And just by way of intro, Mike, I'm finding that, you know, an angle for the cyber conversation in LATAM is actually the regulation and the data protection laws and cyber laws. They're not called cyber laws, and they're starting to kind of switch and cover that scope, but they've been there for 10 years, data protection laws and those kind of things, which are a good scoping space for the conversation around cyber coverage and things of that nature. So I wonder, what do you think about that, and how are you seeing it?
So it's really interesting. I live in Thailand, right? And you would be amazed if you just look at it from a distance. You'd probably think they don't even have a sandbox in Thailand. But the Office of Insurance Regulations here, the OIC, is actually really forward-thinking, very progressive. And they have set up a sandbox for people to test exactly the things that you're talking about. And that's also true in Singapore, Malaysia, and Hong Kong. And I cover India as well. And the IRDA has also been pretty amazing at setting up sandboxes to cover and to test all of these things. And they're worried about the same type of stuff that you are, right? Because they want to make sure that there's experimentation, but they also want to make sure that their customers are protected in a way that makes sense. And they want to put some constraints on the data that gets used, right? In Europe, you have GDPR and all these other frameworks set up. Those frameworks are being used here, but they haven't been set up here. But the governments here are also very concerned about privacy. But there's another interesting thing that's going on. In Southeast Asia, from a regulatory standpoint, the things I think, again, that concern Europeans and North Americans are very different, and Latin Americans as well, is very different. The population in the region where I live is very, very young. And those youngsters are where the first bit of penetration for insurance is going to happen here. And they're deeply unconcerned about data privacy. It's really interesting, actually. They're willing to trade their data access for convenience and for better products, and to be fair, for more personalization. They're really into hyper-personalization. They want a product that's designed specifically for them, and they don't care about giving up their data to get that. Does that make sense? Because I think it's completely different than it is in the rest of the world. But those frameworks here in these sandboxes have been set up. And let's take a country like Singapore. The Monetary Authority of Singapore, right, which manages and regulates the entire finance space in Singapore, again, has to be one of the most forward-looking and one of the most sophisticated regulators in the world. And the rest of the region kind of looks to them for guidance. I think the Singapore FinTech Festival, which also includes insurance, there will be ITC Asia again, but it's a much smaller event, right? So ITC Asia, 2,000 people. Singapore FinTech Festival, put on by the Monetary Authority of Singapore, has 65,000 people there. So that's where more stuff happens. I love the ITC team. Nothing against them, but it's just a much smaller event. But I'm saying they're so sophisticated in the way they look at things like cyber risk, digital asset risk, and things like that. But remember, the younger part of the population is not concerned with their data privacy in a way that's similar to it is outside of this region.
And Michael, sorry to jump quickly on that one, because you touched something close to my heart. I witnessed firsthand what you said around the Monetary Authority of Singapore, because Box, we pitched to them 4 or 5 years ago about having a cyber assessment for the SMEs that actually get grants or loans through the authority.
Yep.
And they said, you're absolutely right. This is risk management at its best.
Yep.
Put it in. And we went like, what? Are you actually agreeing with us? And this was, again, 4 or 5 years ago when we were pitching this to many other organizations. And they were seeing it as a nice to have. But these guys picked it up just like that. And to this day, they still use it. So
I don't want to get into global politics, but the way that the Singaporeans look at regulation is a way of helping to guide the economy into its next phase, right? And if you go back and look at Singapore's history, which I believe is about 65 years old, it'll be 66 years old this year. It went from literally like a fishing village into an electronics manufacturing economy, into kind of a knowledge economy, and now into a finance and a digital asset economy. And all of that has been managed super well at the government and regulatory level. And it's one of the reasons why they've been so successful. Singapore is one of the wealthiest GDP per capita countries in the world. Yeah.
And that is important. I'm going to jump quickly on regulation in Europe, because last week we had a regulation coming, I would say, to full blast, right? DORA, the Digital Operational Resilience Act, has come out in Europe on the 17th of January 2025. It started in 2023, but it entered into force just, I would say, nearly a week ago. And so I think it's very important to reevaluate and elevate the conversation on cyber, because DORA is all about managing IT security and technology, incident reporting, testing. It's about disaster recovery, but also looking at how financial institutions implement cybersecurity. So going back to what Elias mentioned as where cyber is really, really big on the agenda. And I think cyber threats have to be reported by any financial institution now to actually really understand the risk that is affecting users. Another point I would like to make is, I was an advisor at for the Monetary Authority of Singapore many years back. Mm-hmm. And I work for the FCA, which is the FCA now. Regulation used to be at Lloyd's of London. And I was a regulator there. And regulation in the UK is all about conduct. It's about protecting the customer. So sometimes you hear, are we ahead or behind around regulation, partly looking at artificial intelligence. It's finding always the right balance around protecting the customer, right, privacy and security, and making sure that we actually remove that disinformation and misinformation, and making sure that they are able to make the right choices. Now, some of the regulation which are going to affect us tremendously this year, I guess, and the years to come will be the EU AI Act, right? Looking at how we implement artificial intelligence system. There are some, regulatory requirements, partly when the system is making decisions for individuals. We also have a big theme around sustainability. ESG reporting standards, TCFDs, all this stuff are going to bear, but more and more European companies cannot hide anymore. They have to focus on their sustainability strategy. And again, going back to the data privacy regulation, GDPR, and all those things. So data security, cybersecurity, and artificial intelligence will be some of the regulations which are going to affect us all, I think, this year. Florian, anything else on RAG?
Yeah, maybe I was thinking about probably the most active discussion in the European insurance ecosystem around open insurance, or this is the FIDA regulation. I find it quite interesting because I guess that the more we move forward, the more we all expect it to enter into force at one point. Though I cannot forget that the first discussion around this initiative started in January 2021, so a while ago. And what I find interesting, on top of all the discussion that we see on the market right now, incumbent being very cautious, the regulator being very pushy, several startups being very enthusiastic, beyond this kind of trend, what I find interesting is that embedded insurance, for instance, so enabling third parties become insurance distributor, is gaining momentum anyway. And I remember a slide that we put together a while ago where we compared the dynamic in terms of regulation, again, started 4 years ago, and how many startups were operating in that space, for instance, how much they have raised, several of their public KPI, and the gap was huge and massive. So, and obviously investing in entrepreneurs and in startup, I'm rather in the market dynamic than in the regulatory side. I hear that incumbents usually refer to regulation to justify not to do anything. But what I see on the market is that startups are moving forward anyway. So back to the question on the regulatory side, I raised this topic, the FIDA regulation / open insurance regulation, because this is a hot topic that I expect for this year in terms of regulation, though I'm realistic, and whatever will happen with that regulation, things in terms of business are already happening and growing across the European market. So that's rather an advice for the market and for incumbents, I would say. Don't only stick to the regulation time frame. Keep an eye on what entrepreneurs are building, because sometimes the market moves faster than the regulation. And despite the lack of regulation on that topic, things are happening and customers are there. So let's make sure to have a balanced approach between regulation constraint and market opportunity, or I could even say market reality.
Thank you, Florian. And Lisa, any big things around RAG, right? With all those change happening in the United States.
Why did I agree to do this today, right after inauguration? What? I feel like I got punked by all of you all. No, I mean, you know what? Let's go ahead and get Stargate out on the table, right? Clearly, we have just announced a recension of all, what was formerly in Biden's AI policy. Executive orders flying left, right, and center, but the most hot off the press one deals with AI. And of course, we've announced a $500 billion with a B project with a combination of Titans, Oracle, SoftBank, OpenAI. More to come on that. I would say that definitely what we're demonstrating is that the U.S. is going to definitely want to lead the pack here in terms of entrepreneurialism, in terms of speed, in terms of market, and in terms of competitive advantage. Like, who are we competing against? Clearly we're going to be looking at China and understanding, like, how are we going to win an arms race, the arms race being with AI. So I would say that that's going to create a lot of entrepreneurial opportunities, most likely. Then I will balance that with a lot of data privacy, data sovereignty regulation, both from the Department of Regulation of New York, all the way down to the NAIC, all the way down to state by state. Clearly, we do not have GDPR, but we have state by state data privacy, data sovereignty adoption. And the one maybe consistent theme I would draw here in terms of trends and what we're looking out for and what we're watching is that if you're building something without underlying scalability and security in mind, it's going to be susceptible to being not usable, maybe be deemed invalid, etc. So if I take all those worlds and I kind of connect them together, the way I like to think about it is we need to think of individuals as owning their data, whether they own it overtly today or by tomorrow, they need the ability to own that. And Michael, I'm going to connect to something you said, which is like, in Asia, the younger generation just doesn't care as long as it's personalized, available, and immediate. I feel like in the US, we have a similar mentality, which is, impatience and immediacy. I'll check the box and move on, which of course has resulted in a lot of lawsuits of people having data and maybe opting in and people didn't know about it. But my point to that is, as an economy and as a society and as consumers of advanced technology, we're going to get much more into that, especially as we start to exchange information, cross-pollination. So if I had to really think about it, it is, how do we maintain a principle first mentality? Because all the regulation that I believe we'll see will be principles based and traceability. So how do you prove traceability and what the black box is doing, which will be abstraction. And I'm not going to get too techie, Sabine, but how do you abstract decision layers on top of the AI? Because the regulatory environment will continue to be a little bit chaotic. And I think the most important trend that I would see if I was investing or building something on either side is abstraction layers that then can meet the regulation as the regulation's forming, but that's not preventing you from getting product to market and opportunities to market. And then maybe like one placeholder that I would just like to say is, we haven't had a lot of depth on, provability has been like rules and how do we prove out the rules that we're using in our system. As we get into much more complex data exchange and data sharing, I'll almost use the word here, like zero knowledge proofs. How do we know? And I'm using a little bit of a blockchain word there, but think about it just conceptually. And Hilario, I'm gonna I think this is really like interesting. How do we know? How do we actually know the information in chain of command? I think that underpinning is going to be the foundation of being able to move fast with meeting whatever regulatory framework is coming at us while we're building like these immediate products that the market will demand. Okay, I'll be quiet there because clearly there's so much.
Lisa, can I follow up for a second if you don't mind?
Of course.
So owning your own data, I think, is something that's actually really important. And I'll call it like self-sovereign data ownership. I own it. It's mine. You don't get access to it unless I give it to you. But that's also a blockchain terminology as well. Are you getting the sense in the United States, in North America, that type of scenario where there is a blockchain solution where I own my own data and then I get to parse it out to people, whether I get paid for it or not, we can solve that under a different question. But is that what you're suggesting is taking place, and that's going to give it this type of serviceability that you're suggesting?
Correct. Yes. And Michael, yes, for people that are, I would say if I was investing or building, for people that are connecting patterns that will be building the actual future of tomorrow, that's exactly the keys I'm looking for and I'm seeing start to emerge. And not everybody, Michael, because most people are on that add a widget to a widget. It's that incompatibility. But where I'm going to just amplify what you're saying. Right now, it's not individuals opting in and owning it. It's maybe the company owning the decision logic or the company owning that data. And you're seeing it with data exchange, and then you'll see decision logic exchange, here we go. And then you'll actually see, you know what? I had it all along in my foundation. I can allow the individual to own that. The future, Michael, January 2025, the future is going to be built on people that constructed that into their foundation today, because those are the people that when we get to that inflection point, just check, electrification and activation. And yes, I see that being rooted. And, I don't think it's just me, by the way. I've studied a lot of leaders, both investors at MIT, at Carnegie Mellon. The best use of blockchain is, in fact, security and scalability for AI. So, Michael, to answer your question, it's probably the most practical use of blockchain that I've seen.
I want to do one more follow-up because I think it's really important, and I want you to get your head around just how big this is. A DAR, okay, is the name of a 12-digit unique identifying number in India. So 1 point whatever number comes after the billion in India now have a digital ID built by the government based on their biometrics and their demographic data. Think about the power that gives in combination with one other thing that India did, which is amazing, which is the unified payment interface, which gives every business, whether they're a multi-trillion-dollar business or literally some guy on the side of the road selling tea, access to fintech rails, which I think is relevant for this conversation because it's like, how is technology changing the way we run our economies? Those two things together are going to change the way the Indian economy runs. And I'm super curious if things like that are happening in Europe and in the US. And I just want to make one more point, if everybody doesn't mind. I think the regulatory, just to get back to the original question on regulatory, the regulatory view out here is we want to put regulations in place to make it easier for business to operate and serve customers in a way that they deserve. So again, it's just a different look on all this stuff. And if you combine that with what India is doing on the digital identity and the unified payment interface, it's just going to change the game for the way that economy gets run.
Yeah. But Michael, the problem we have in Europe, and maybe Florian is going to echo this, is that we have regulation, and regulation is slowing things right now in Europe.
Yeah, here it
we've
speeds
seen
it up.
the 1 billion the trillions, nearly trillions investment in the US and in China around artificial intelligence. When you look at autonomous driving, it's not perfect, but it's running in Silicon Valley and is going to run this year in China. Right now, is that fear? Florian, don't know, but we are behind around some of those innovations, I would say.
Yeah.
So, regulation. Elias, was it you going into Regulation X?
No, I actually kickstarted this whole conversation, but I think Florian wanted to say something following your comments. Sabine.
No. I wanted to come back maybe beyond on the data and sharing data. I think that this also raises a fair point, which is not related to regulation, but rather customer willingness to share that data. And I think that this should be the first question any incumbent, whatever the industry, should raise first, beyond the regulation, beyond the technology to make this happen. This is, okay, why customer would agree to share their data with me as a business. And as soon as you can answer that question, then you will find a way, again, to fit with the regulation. You will leverage the right technologies, that blockchain or whatever technology, because listening to you, I was thinking about a startup, I cannot recall the name, but this is exactly what they were offering, enabled you to monetize your own personal data.
Yeah, it's going to happen.
So that, I don't know if they rely on the blockchain technology, but once again, technology is just a means, not a goal in itself. So again, I believe that the challenge around data sharing is definitely the value added or the value perceived by the customer themselves, beyond any regulation, beyond any kind of technology.
You have touched upon that customer strategy. So, Elias, as you go into diving into what you want to say, let's go into talking about the customer, driving maybe purpose. And if you don't mind, I would really like to talk a bit about sustainability, because some of the stuff happened recently in the US around sustainability and climate. I was a bit surprised, but all yours, Elias.
No, I think two comments really quickly, and we jump into sustainability. One is, it's a very exciting time for what we've just spoken in terms of the customer knowing the value of their data, because then that changes the sense of responsibility and also the demand of how that data is procured and secured and used, by the entities. And so in many ways, before we even get to monetize our own data as customers, I think there's going to be a stage whereby I'm going to say, okay, I'm going to share my data with you. How are you, institution, going to protect my data? Right? And that puts a lot of responsibility, certainly in a different league that currently organizations have, which is we customers have to agree to the T's and C's, and that's it, right? So that's one angle. The other angle is, I think, again, that helps us accelerate the speed at which emerging economies can actually innovate. To Michael's point earlier around how quickly Singapore has come in 65 years, or what the Indian example that he was putting forward earlier. So I think that it's only a good thing because it will create accelerated innovation, accelerated development, more maturity, and better competition. And in many ways, that can only be a good thing provided that the balance is well managed across, because then that would lead to true sustainability. And I think that's the right segue to where you want to go, Sabine.
Thank you. So can I maybe come to Tunde around customer experience, right? We talk about the customer, improving the customer engagement. We talk about technology enabling us to personalize and really actually maybe creating that segment of one. When I went to do my MBA actually 25 years ago today, we were already talking about the segment of one. And I think actually AI and generative AI and where it's going, and probably Lisa will go into the centralized data and how you make it happen. It's all about potentially being able to personalize to a point where we have never seen before. So what's happening in your part of the world when you start looking at the customer, how we treat the customer, how we prevent risk, but also how do we personalize things? Because for them, in Africa, probably sharing data is not a problem. And so
let me pick
the other angle to your answer would be, what is also the impact of sustainability within your market?
Here's the thing. There's tons of data here and there, but there's a lot of Chinese walls, right, when it comes to sharing data, right? So it's just that, so between the private sector and the government, there's a whole lot going on, right? There are literally some companies that you won't be able to do business with until you fulfill certain criteria, right, in terms of data protection and privacy, right? And it's the other extreme for certain other players in the market. So it's a mix. It's like very, very extreme ends. You have the very, there are companies that, would not do anything, until you show some level of GDPR compliance, right? Which is a tall order to achieve on this side of the fence, right? But I thought it was just important to mention that, because at the end of the day, it's we're getting there, but we're definitely not. It's not like Europe for sure. Maybe a little bit leaning towards Michael's side, but we're getting there. Now, coming to the consumer appetite, right? It's again, it's similar markets, LATAM and Asia. We house a very dynamic population, right? Two factors that I like to consider is how we punch in above our weight when it comes to the population, and versus the GDP of the economies scattered around the different nooks and crannies of Africa, right? And when we look at what has happened in terms of population, I mean, Africa is home to about 1.6 billion people, which is projected to double to 2.5 within now, and is it 2050? Yeah, thereabout. So when you look at that, the appetite has definitely changed. And I'll give a very strong example. Now you come out with, so before now, you would have a situation whereby the customer appetite was prejudiced on what was sold by default, imposed maybe on regulation. So something as simple as auto insurance, right? So you literally were not going to buy or purchase because you're just, I mean, a lot of consumers on my side of the fence would rather just wing it because to have a comprehensive cover is pretty expensive. But then there are laws that are now being that were now put into place subsequently to say, if you don't have this, then you'll be penalized, right? And then there comes the concept of third-party motor insurance, which is much cheaper, right? But we've started to see a very drastic shift from the mindset of I'm buying this just to be able to make sure that I comply, right? And I don't get arrested by the police when I'm on the road for not having insurance. To I really need to de-risk, right? And protect myself from just I have this car which is an asset or call it whatever I want to call it, and I really don't have any protection cover over it. And that's something that is placated to property insurance and its own ownership, and also to marine insurance, to the other various kinds of insurance. So what am I saying in essence? There's a gradual shift in the mind. There's a gradual shift that has happened over the past, say, 7 to 10 years, culturally, particularly to how the outlook is towards insurance, and that's growing very rapidly. Now, when you come down to the south of Africa, it's a different ballgame entirely, right? Because that's something that has always been interwoven into the DNA down there, right? You don't do anything without insurance. And so you've got very advanced models of insurance. You've got cell-captive insurances wherein um, a non-insurer could basically write on the license of a cell-captive insurance and is able to focus fully on distribution and get to the end user what customer wants precisely, right? And it's little no wonder why, I mean, you have a larger penetration. I think South Africa and Namibia are the only countries that are punching above the global average of the insurance penetration rate. South Africa 11.9% and the other 7.4% respectively, right? Every other country falls somewhere between 2 to 4%. When you look at that, that's below the average. And then we have the category of the larger countries, which, I mean, out of 54, when you have over 40 countries just swinging somewhere between 0% to 2%. So what does that do? It now goes to your question, Sabine, on the customers, right? So now customers are now trying to look for things that fit their lifestyle, fit predominantly the income, and also how they can, get things to move around and work for them easily, right? Just the same way. And what has happened is with the fintech adoption and penetration, where people are able to get financial services and make purchases on a daily basis very easily. Insurance being a financial service, right, is only just tailing towards that pathway. It's not where we expect it to be yet, but definitely it's a major, massive leap from what it was 7 to 10 years ago. Now, let me give a practical example, and I'll just pause there. When you come to certain cities in Africa, Lagos, Accra, Nairobi, Johannesburg, right? Lagos particularly, right? Let me take Lagos for example. We've got this people we call the POS agents, right? And they've got devices. It's interesting what has flipped within the past 3 years since COVID, wherein you could literally go to that agent and the agent has more cash at hand than the bank, right? And so what has happened is it's been a flip just before the COVID where you had to go to the banks and, if you're at the ATMs and people are trying to withdraw cash and you see queues and queues and queues, you do get your money at some point. But now it's the reverse of the case, right? So you have limits on cash withdrawals because, most economies in Africa are trying to go cashless and digital. You are not able to access certain amount of money over the counter or over ATM withdrawals. But if you went to a POS cash agent who's just got this device and you said, I wanted to say $100 or $200, for example, right? He's only going to charge you more than what the banks would charge, makes more money, and gives you the cash, right? So it's created this massive ecosystem to a point. Okay, so not to promote them. Last year, a company called MoneyPoint just became one of Africa's top unicorns that joined the unicorn list. And this is how they cracked the code, right? It was basically, they have a fantastic report that talks about the informal sector and the informal economy. So that sector and that economy, there's a lot of movement of cash around, right? Still 6 out of every 10 adults, mirroring the Southeast Asia numbers.
Yeah. I feel a lot of embedded here, right? On-demand embedded sounds like, a big part of what is happening in your market. So last question to everyone. When we actually look at this behavioral change and expectation, where do you see the landscape going? So I'm going to start with Michael, then we go to Elias, Florian, and we finish with Lisa. Where are we going when we start looking at the rest of the year? Give us your crystal ball view.
I don't enjoy making predictions at all, but I will say this. I think you're going to continue to see something, again, that we didn't really talk about that much. We spent a lot of time talking about how AI was going to create products, whether it's generative AI or agentic AI. But I think one of the things we're definitely going to see in Asia is AI inside the enterprise, just making people that work internally way more productive and also much happier to be at work because they can accomplish things at work. And just to give everybody perspective, I saw this happen when I was at Goldman Sachs. The more we automated things, the happier people were to be there because it then freed them up and allowed them to do things at work that they really wanted to do, as opposed to sort of rote things that they didn't really want to do or enjoy doing. And I think you're going to see a lot of that actually in Southeast Asia. And to be fair, a lot of the conversations that I have, both with incumbent insurers, but also some of the biggest banks, we actually put out something on the Asia Tech podcast today with Nimish Panchmatia, and he spent a ton of time talking about how they are using AI and testing AI internally to make people's jobs better and easier to do. And I think that's going to be a really big theme in Asia this year.
I think, Michael, should I come to you, Ilario?
Yeah, I think I completely agree with Michael. I think in Latin America, we're going to see this leapfrog effect I told you about. We're going to see these phenomenal new technologies come to develop businesses, particularly SMEs, into a more sophisticated commercial machines. We think distribution is going to get a lot more sophisticated. It's going to reach more people, which again, that should be our focus. More people insured in more places, and more businesses as well. I also think that there's going to be a great opportunity for incumbents to demonstrate their level of sophistication that their investments into these technologies can actually bring, not only for distribution, but equally for all kinds of enablers, whether it's customer service or claims management or, all sorts of other elements. And I think that is going to be a phenomenal way to see our emerging markets compete much better among themselves, but equally grow, our position, our penetration in the insurance segments, and again makes us more sophisticated. So I'm really excited about the next few years, and I'm excited that we're in this together because we've been in this when it was very little, and we've seen it grow, and now it keeps on growing. And it keeps on getting better. So it's a fantastic moment to be into this.
Thank you. Florian?
Yeah, well, I think that for the prediction, I did a few of them online a few weeks ago. Obviously, one is on AI, but I will take my investor hat to share a perspective on prediction for today. I expect a lot around market consolidation in the European InsurTech scene. I know that I've predicted that an M&A wave would happen for the last 2 years, and it didn't for many reasons. But I think that the more we move forward, the more not only startups should consider merging, because this might be the only option they have to keep operating. But I also see a very opportunistic reality on the market, which is that there start to be several startups that are profitable. And they all of a sudden, when InsurTech, and again, I'm not saying that all of them, several of them start being profitable, these players are nice entry point for private equity funds that would like to enter the InsurTech space for a build-up strategy. They could enter by acquiring a profitable company and then merge with several other players, because we see that across the European InsurTech scene, there are players which are complementary, either because they are complementary in terms of geographic footprint, or because they are complementary in terms of customer logos, or they are complementary because they are addressing different parts of the value chain. And maybe, and most probably, so altogether, they could deliver more value to the market than staying on themselves. But once again, for a PE fund to develop and move forward with such a build-up strategy, they would need to rely first on a profitable company. So that's something that I not only wish as an investor, but I also expect, because once again, we see very exciting companies that would benefit from working together. And on the other hand, we know that the private equity industry is very attracted by the insurance ecosystem. So most probably mixing technology and insurance should sound attractive. And now that we have several profitable players, this is probably a wave to come. So that would be my prediction for this year.
And Lisa?
Yeah, I'll try to keep my prediction to 30 seconds, Sabine. That's always hard. But I guess what I'll say is, foundationally, you cannot, as an industry, keep adding up pieces and pieces and pieces of solutions and come up with an affordable, like the tech doesn't add up against the losses we're experiencing, due to severe increasing risk situations. So at the end of the day, it will not be solved by adding things up more and more and more on the expenses, and OpEx is not the solution. So I predict, and I didn't get a chance to talk about this, as we become more hyper personalized, the people that actually bear the risk can't necessarily afford their hyper personalized risk. So a lot of the trends that I'm seeing are, how do we solve the problem of risk, of capacity, and of affordability of insurance? That will be born by, Sabine, I'll take sustainability another level. It will be born by sustainability of solutioning. How do we, to your point, Florian, I'll go a different way on cost. How do we democratize and demonetize the redundancy of processing, of data, of buying the same thing over and over and over again? The value chain as a whole has to unlock that, or we can't achieve our outcome mission, which is affordability, capacity, and ultimately to make profitable losses. We are in the business of actually making our balance sheets and income statements work to our stockholders. Over to you, Sabine. I tried to make that brief.
So first, I want to thank you so much for participating in the discussion. We need to do that more often. When we started with Michael, we said, let's see whether we can do that every quarter, right? And probably we need longer. So we'll see how we can organize that. But some of the few words I think I would like everybody to remember is, we actually talked a lot about risk resilience. We talk about affordability. One thing I like about what Lisa said is, AI cannot be just a component. It has to sit across everything we do, which means we need to rethink how we build systems, how we build processes. We can't just take the old and just snap them together. We are moving in a world where emerging risk is going to be more prevalent. And as a result, one of the key areas I think we are all suffering with is a brain drain. We have this brain drain in the UK, for instance, and I think we are affecting by that. So where do we find talent? Workforce and workplace transformation is taking place. At the same time, we have all this regulation, and we need to be mindful of privacy and security, and also understanding the ethical consideration around implementing artificial intelligence technology in general, what I call frontier technology. But in the end, let's find ways to make people happy. Technology can help us all and augment what we do every day. Maybe we can move into a vocational work, God knows, but let's see where we can go with all this tech. Again, thank you all for joining us, me, today, and let's do this again if we can. I hope you enjoyed this episode of Scouting for Growth. Please subscribe, share with friends, and leave a 5-star rating. Your rating is so valuable. I review all of them, and my team help me adapt content to meet your needs. Also, connect with me on my preferred channels. I am a B2B growth expert, so you will find me on LinkedIn, Instagram, and Threads, and X as well as Blue Sky. All information available below. Until next, keep scouting for growth.